Well, joining me now to discuss what we can expect in the day ahead is Scott Phillips from the Motley Fool. And Scott, this time 24 hours ago, we were thinking, well, of course, those concerns about the AI bubble were stretched, but now we're back climbing the wall of worry.
My goodness, and overnight, I think the market was up 1.9% at one point. So the best part of a 3% turnaround. It might have been more from absolute top to absolute bottom during the trading day. It wasn't even like they started high and fell. They kind of started high, got a little bit higher for a while, and then completely fell out of bed. I really struggle to, well, sentiment is sentiment, right? So let's be honest, trying to work out daily movements is just hard in general. There was nothing in the numbers between Nvidia's release at 4 p.m. New York time yesterday, so our time yesterday morning, to the market then getting halfway through its trading day that really should have scared the horses. The numbers were very good. They were very clear. The shares are up after hours. They went further up after hours. They started really well. I mean, sentiment changes. The lemmings will do what the lemmings will do, but really, really hard to justify in any meaningful way, trying to describe in any meaningful way what happened based on that data. There's just nothing there to really speak to why there should have been a big rise and then a big fall. The numbers for Nvidia, I'm not an Nvidia shareholder, mate, and I worry about the good news being all priced in. A PE of about 50, not stupid, but these guys make 75% gross margins. Now, let's break that down. They're selling the product for 4 times its cost to make. You get away with that while you have a monopoly product or a monopoly market. Maybe that goes forever, maybe it doesn't. Maybe they have to reduce their price when a competitor comes in. Maybe a competitor has a better chip at some point, and Nvidia's a sales crater, or maybe in a decade's time, Nvidia's 10 times the size it is today. No one knows for sure, but I really, really struggle to see what the market was. If you're going to be disappointed with that sort of number, you should have been disappointed ages ago. 22% quarter on quarter, 66% up year on year. It was a blowout result. And we're used to it from Nvidia, by the way. Maybe expectations were just too high. Maybe what comes next is worrying investors, but there's nothing in the numbers to scare anybody. Changing your mind on Nvidia or AI in general over that 24-hour period, given that data, really hard to justify.
Yeah, absolutely. But it does mean we are in for a day of pain locally, Scott. A lot of AGMs out as well. I know WiseTech on the docket. Tell us what's going on corporate-wise, because Drone Shield as well has been one to watch.
My goodness. I mean, that story has been an absolute debacle, hasn't it? And look, there's so much here to really talk through, Juliet. We haven't got time to do the whole story. The first thing is the growth. Look at that chart. The growth in the share price was completely unjustified in any fundamentals. It was pure speculative territory. And you know what? Sometimes speculations pay off. So I'm not saying you can't do it or shouldn't do it or wouldn't do it. Everyone's got to make their own decisions on their trading, investing, speculating. Do your thing. But the growth in that share price, the growth in the market value of that company on what was effectively a really cool gun that may or may not be something that people keep using in the future, was always ridiculously speculative. So you had this hot stock, hot money, story stock, all the things, right? Now, by the way, the product works, but the reality is you're selling a confidential product to confidential customers, where generally speaking, most of the time you don't know who the competitors are, what the technology is going to be, whether these guys remain. I'm talking about Nvidia and their chips. Is Drone Shield going to have a competitive product in 6 months, 8 months, a year, 2 years, 5 years? It's impossible to know. Now, maybe you can make a punt and say, well, maybe, possibly they've got some customers, so maybe there's there, and maybe there is. But when you pay those sort of prices, you have to assume not only is there something there, but it's going to be much, much, much bigger, regardless of what the competition does, regardless of what the customers decide. So that was always the first thing. Second thing, you get executives selling everything they own. Now, honestly, by the way, CEOs are often great judges of market value, right? We kind of look at them and go, oh, they must know a thing. Maybe they do, but most of the time they don't. We'd like to think they are somehow, they can see the future of share prices. They don't know the future of share price more than anybody else. So there's that. But when you say, well, I've got 50 million bucks here, I can let it ride on Drone Shield, I can take the money off the table. When they choose the latter, it tells the market, again, deliberately or otherwise, the market reads a lot into that, and probably should. Selling a small amount because you want to buy a house, one thing. Selling everything you own to take money off the table, again, the market reads into that really specifically and clearly, and I can't blame it. I've been critical of people looking at Russell and Kogan or Marcus Blackmore back in the day. I own Kogan shares, by the way. Marcus Blackmore back in the day sold shares to buy a yacht, right? That's just a lifestyle decision. Good luck to him. Who cares, But when you sell everything that you own, and then we hear yesterday they sold some shares between the time an incorrect announcement was made to the ASX and then the couple of days later when that was corrected. This is just a complete cluster. Like, it's just a mess, right? Combine all that stuff together and go, what are you doing? again, the tech might be useful, the tech might be valuable, maybe the company's worth more at some point in the future. How you have the optimism, the confidence to invest, given everything I've just talked about, I don't know. I've never owned Drone Shield, never recommended Drone Shield. I look like an idiot for a long time because the price went up and up and up. I'm not trying to bet on short-term price movements. Long-term, show me the money. Show me the technology, show me the competitive leadership, show me the fact that signing more and more and larger contracts. The problem with defence contractors, it's always going to be opaque because they're not allowed to release most information. They can't make the specs of the anti-drone technology open source. Of course they can't, by definition. So you're always taking these things on faith. Sometimes it works. I might have said that about Lockheed Martin 50 years ago, I don't know. But you've got to be really, really careful how much you pay, what confidence you put into an assumption when you can't test those assumptions.
Absolutely. All right, Scott, where could we see some potential bright spot? I mean, lithium's been kind of looking good of late.
Oh, it's a tough one, isn't it? I suspect that there are some good technology businesses floating around. There are some really overpriced ones as well, by the way. So be very, very careful. I was on the call earlier this week talking about Technology One, which is a wonderful business, but I just can't pay the prevailing price. But I suspect the baby in the bathwater problem. We started talking about AI, we started talking about tech. The Australian tech sector, I haven't checked the numbers today, it was down something like 18% over the last month. I think it might have been Monday or Tuesday's numbers. So we've got a really bombed out sector amongst, the total market's down, 4-month lows, okay, but the size of the fall for tech is huge. Now that, for me, I'm not a value guy, I'm not even particularly contrarian, but if I'm looking for value, if I'm looking for upside, I want to go where everyone else has bombed out and walked away, because that's where you pick through the wreckage and go, maybe there's something here, maybe there's a there, as the cool kids say. So I reckon tech is a great place to go looking. I wouldn't be playing lithium, Juliet, you probably know that from me by now. The supply response is ever present, an ever present threat, frankly, to the lithium price. So take your wins if you've got them in the last little while. I'd be selling lithium shares if I owned them today. The commodity price is up, the share prices are up. Maybe it goes high, maybe it doesn't. Bird in the hand, two in the bush, I'd take the money because there will be a supply response at some point. The other thing I think we can probably have a think about is some retail companies. And again, I like the retail space more broadly because it means you can actually take what we know, the old Peter Lynch, buy what you know, look around and say, where is their opportunity? Where have companies been left behind? Now, there's not much left there anymore. Even Harvey Norman's up to like 18 times earnings or something. I own shares in that one as well. I don't own JB. They're doing very well as well. So there's the market's not exactly new to retail, but I do think over the next 6 or 12 months, particularly online. We heard from Jarden during the week that they reckon next year, Amazon, Shein and Temu between them will represent 36% of total online sales. Now, that means the little guys getting pushed out to some degree market share-wise, absolutely. The bigger story here is online continues to grow at 4 or 5 times the pace of physical retail. So if you can find a retail that's either online pure play or physical retail with an omni-channel offering that's working, Coles and Woolies are growing their online sales at 15, 18%, and the total sales are up 3 or 5%. I mean, think about where the winners are coming from in that space. The compound returns from some of those, I think, will be pretty impressive if you can find them. Again, it's kind of a stock pickers market, not as much as it was 2 or 3 months ago. The share prices are down across the board, but do look around those kind of areas. I think there's some value there. I'd still be steering very clear of the banks, Juliet, I have to say. It was a shocking reporting season. Some people are trying to find some value amongst the big four. Commonwealth Bank, massively overvalued. The other banks, fairish maybe if you're generous, but I wouldn't be shopping there. So plenty of opportunities, but look around the smaller end of the market. Look for some of those companies that have been beaten down, because when everyone sells AI, they sell all tech. When they sell all tech, there's going to be babies thrown out with the bathwater. Now, that's a pretty good place to be sniffing around, I think.